Hello everyone. Today, let's look at the difference between product and period cost. So as you know that last time we talked about the product cost. The product costs include three types of costs: direct materials, direct labor, and manufacturing overhead. So you remember direct materials? That are the cost of the raw material that we use to produce a product. Direct labor is the cost of the wages that we pay to the worker who directly touch the product and produce the product. And we learn about manufacturing overhead. That includes other manufacturing costs, indirect material, and indirect labor. Okay, so these three types of costs, we call it product costs or manufacturing costs. And they are the costs that take part of producing the product. And normally we record these total costs in the inventory account in manufacturing company. And we can only expense this as a cost of goods sold when we sell the inventory. Now, period costs are different. They are expense, okay, that we deduct it from our income statement, and they are not manufacturing costs. Okay, so remember that they are not manufacturing costs. The period costs are not manufacturing costs. And normally they include two types of costs. It includes selling costs, administrative expenses, and the selling expenses. It can be, for example, sell commission. If you have delivery expense to the customer, it will be selling expenses. Um, Administrative expenses may include, for example, the wages that we pay to the president, the wages that we pay to the secretary, the accountant, depreciation expense of the copy machine in the office. Okay, so mostly about office expenses. It's not related to the factory. Okay. So in summary, you can see here, again, product costs include manufacturing costs, any cost that related to producing the products at the factory, direct material, direct labor, and manufacturing overhead. But period costs will include non-manufacturing costs like selling expenses, administrative expenses. Okay. Now let's try an example. All right. So if you open the PowerPoint to illustration number 19.4, and you can follow up with me. Now your job now is to identify whether these costs are direct material, direct labor, manufacturing overhead, okay, or if they are period costs. Okay. First of all, the material cost. Now, material cost is the cost that we use, right, to produce the product. So it should be direct materials, okay? Labor cost. Now, labor cost is the cost that we pay to the wages of the workers. So it will be labor cost, direct labor cost. It's under product cost. Depreciation on factory equipment. Do you remember that? It would be other manufacturing costs under manufacturing overhead. So it should be manufacturing overhead. And then we have property taxes on factory building, $6,000 per year. So it's also under manufacturing overhead. Okay, now let's continue. What about advertising costs? Are they product costs? It's not related to factory, right? So it should be period costs. And then we have sales commissions. Sale commission, you remember, is related to selling expenses, right? So it should be period cost. It's not related to product cost. Maintenance salary. Okay, maintenance salary. Now this is the maintenance salary to the worker who work at the factory facility. At the factory, right? So it should related to manufacturing cost. So in this case, it should be under manufacturing overhead. What about the salary of the plant manager? Plant, it means factory. So salary for the factory manager, it should be under manufacturing overhead because it's indirect labor. Okay. Cost of shipping boards, $8 per board. Now this should be under period cost. Okay, it is delivery cost to the customer, selling cost. All right. All right, now let's look at another example. If Lapland boards produce 10,000 snowboards the first year, what would be the total manufacturing cost? Okay, so we have material cost 30 times 10,000 units. Okay, that will give us 300,000. Labor cost 40 times 10,000, that will give us 400,000. Now for manufacturing overhead, we have depreciation on factory equipment, 25,000. Property taxes on factory building, which is 6,000. Maintenance salary, factory facility, 45,000. And salary of plant manager, 70,000. So the total manufacturing cost would be 846,000. Okay. Direct material, direct labor, and manufacturing overhead. Okay, now let's look at another example. A bicycle company has these costs: tires, salaries of employees who put the tires on the wheels, factory depreciation, advertising expenditures, the lubricants, spokes, salary of factory manager, salary of accountant, handlebars, salary of factory maintenance employees. Classify each cost as direct materials, direct labor, overhead, or a period cost. Okay. Now let's look at each one of them. First of all, the tire, the cost of the tires. So the cost of the tire should be under direct materials, right? Because it's the material that we put in the bike. Salary of employees who put the tires on the wheels. So this should be under direct labor. Okay, direct labor. And then we have the spokes and handlebars. These costs should be under direct materials. And factory depreciation, it should be under manufacturing overhead. Okay, factory lubricant, this is under indirect material, so it should be manufacturing overhead, because the lubricant is just like the oil, is very small. It's not significant, but it's necessary to put it in the bike. Okay, so it is we call it indirect material, and it is under manufacturing overhead. And then we have factory manager salary. This is related to the factory, so it should be under manufacturing overhead. And we have factory maintenance employee salary. Okay. The two type of period cost here we have is the advertising cost, which is the selling expenses, and the salary of the accountant, which is the administrative expense. So it should be under period cost. It's not manufacturing cost. Okay, so the cost of goods sold is classified in the on the income statement. Okay, you remember we have sales minus cost of goods sold, and that will give us gross profit. Okay. So for merchandising company, we take beginning inventory plus cost of goods purchased minus ending inventory, and that will give us cost of goods sold. For manufacturer, it will be similar. The difference is that we add cost of goods manufactured instead of cost of goods purchased. Okay. And to find the cost of goods sold, we're going to do the same thing. Beginning inventory plus cost of goods manufactured minus ending inventory, and that will give you cost of goods sold. But in merchandising company, we will add cost of goods purchased minus ending inventory, and that will give you cost of goods sold. Okay. So to find the cost of goods manufactured, we take beginning work in process, add all the manufacturing costs minus ending work in process, and that will give you cost of goods manufactured. Okay. So this is how to prepare a cost of goods manufactured schedule. You can see in my other video how to prepare a cost of goods manufactured. But we will take work in process at the beginning. This is the cost of the products that you are still in process of producing. It's not finished yet. And you add direct material, direct labor, manufacturing overhead. We call these direct material, direct labor, and manufacturing overhead as total manufacturing costs. And then we less the work in process at the end, and that will give us cost of goods manufacture. Okay. So in my other video, you will see how I show you how to find the direct material that we use. And for the manufacturing overhead in your cost of good manufacture, you have to list it out. Okay, you have to list all the manufacturing overhead costs here. Don't just give me the total only. All right. Okay, so you can see in the balance sheet. This is the statement of financial position. For merchandising company, inventory only have one account, inventory. But for manufacturing company, the inventory, under inventory, we have three different accounts: finished good, work in process, and raw material. And then we total all of these three, 128,000, it will be inventory. Okay, so you can look at the example here. That will be the example for the cost of good manufacture. Okay, so I'll stop the recording here.